Hey guys, welcome back to Sun Crypto. In today's content, we'll talk about BTC. We'll take a look at BTC on the weekly, on the 3D, and on the monthly time frame, and what type of price action we could be anticipating going into the second half of 2023. As we've been mentioning since January, most likely price action going to stay bullish in the first half of 2023, and we could get a boring phase or a bearish phase in the second half of 2023. So now it is almost May. We got like 9-10 days to go to close our monthly time frame, right? To close the April cycle and going into our next phase. We know May most of the time it is a bad month for BTC, especially the year prior to the year happening and all that good stuff. But we will take a look at it and talk about all that good stuff, right? So now when we take a look at BTC on a weekly basis, the first thing we can notice is like it is the last week, third week of April, right? And we're getting some sign of slowing down in we're getting some sign of slowing down from the buyers, okay? Meaning like the buyers are not pushing high enough to break above 32k. As we've been saying, 31, 32 going to be a strong resistance. Why? Because if we extend our trend line support slash resistance since like a 2021, the first week of 2021, if you've been following our channel long enough, we said it back then, guys. 28k, 30k going to be a pivot point for the next few years, right? And you can see like right there, back in June 2021, we retested it, spent like nearly 2-3 months around this level, and you can see right here the following summer, June 2022, we spent like few weeks around it before capitulating down to 17.5. Now we're retesting the same level again. So what can we expect? We just have to be very cautious, right? And expect like some sort of challenge or challenges from the bears, trying to avoid, right, letting bulls getting back above 32k, because once we get above 32k, it could be a nice easy ride all the way up to the next fib level, all the way up to 40k. So however, I don't think it will be an easy task for the bulls, right, to break out above 32k. Okay, so now we take a look at our engulfing candle right here. If price action closes right below the previous weekly open right here, we're going to get a valid, okay, textbook type of a pattern. However, most of the time we tend to see these bearishness, right? And the following week, price action just decide to basically pump above the previous weekly high and all that good stuff, right? A good example is right here. Let's take a look at it. A good example was like right there, okay? Back in February 2021, we got a nice engulfing candle right here, right, to engulf the previous weekly cycle, dump all the way down to like 42k from like 57. That was a big dump in terms of percentage, right? Let's take a look at right here, 30% dump. However, the very next week, you can see like we push back up to create our distribution top formation right here. Will we get a similar price action right here? I don't know, but we will see if bulls, okay, or buyers going to be stepping in, trying to keep the price above the weekly 21, above the 3D 21 and all that good stuff, right? So we know as long as we above our weekly 21, above our 3D 21 with a positive 3D MACD, buyers, okay, bulls, they're still going to be controlling the trend since like November, late November. As we've been saying back in November right here, guys, the range 18k, 16k could have been could be the bottom, and right now we could be looking at it as the temporary bottom. I know most bears are still waiting for like a 10k, 5k, 3k and all that good stuff, but BTC moves in cycle. BTC doesn't move like a doesn't move like an alt, okay? It doesn't pump and dump. Yes, it is pretty volatile, but if you miss a local bottom, right, it'll take like, let's say, 6 to 12 months before you retest that level, right? So what does it mean? We already got our 6-month cycle, nearly 6-month cycle. In 2 weeks we will get a 6-month move from like a first week of November up to basically first week of May. And we could be expecting, if we do not break above 32k, we could be expecting anything above 32k after May 7th, May 8th, going to be just a bonus, okay? I wouldn't be expecting you know, a full body candle like a May, closing with a full body candle above like a 40K and all that good stuff. But we will take a look at it, right? So it is time to be cautious, right? Going into May, right? Very, very dangerous, right? To be buying above 32K, you know, starting in May, okay? The best price area, okay? The best price range to be buying, okay? Was the 18,000, right, to you know, 16,000 area, right? But as of now, it will be pretty crucial to be buying above the 32K area, especially, you know, in the second half of 2023, right? But in a short term, right, as long as we above the weekly 21, above the 3D 21, buy is going to be controlling the trend until we basically get these indicators to flip negative and all that good stuff, right? So if we take a look at the 3D 21, you can see right here, price action is, you know, staying above the 21 EMA. MACD slightly positive, right? It could flip negative. I'm not sure if it will, but I'm just gonna keep, you know, I'm just gonna keep watching our MACD on a 3D basis, right? If we retest our 3D 21, just about like a 26,675.61 for Leroy, right? That'll be a temporary sign of, you know, a temporary sign of support. I would just call it a support because the 3D 21 most of the time it is a good support in a strong uptrend. Okay, if we do break it, we still got the weekly 21 EMA. As of now, it is very deep. I don't think we will retest it this week. It is at 24,467.20 for Leroy, right? So we'll see if, you know, over the next like a few weeks, the weekly 21 EMA will be moving much faster to support the price action and give us some, you know, pretty good support. If not, if we break it with a negative momentum on our MACD, that could signal the end of the trend, right? And we could be looking for some sideways correction or some basically, you know, some new type of, you know, correcting phase, right? Starting like in the second half of 2023 and all that good stuff, right? We don't know what type of correction we're going to get. It could be a flat, it could be, you know, another flat right here, you know, a WXY, it could be a wedge pattern. We don't know. We just don't want to be speculating too much about like what type of a price action we're going to get once we start to correct, right? But the main thing to remember, right, it is like even though we could get some sideways correction or a pullback and all that good stuff, price action might just be correcting based on our impulsive wave right here, right? So we might not be correcting any longer, right, based on our previous wave right here, our big bear market wave right there. So if we're going to be correcting, we will start to basically look for our fibs, right? Let's say 50%, 0.618 and all that good stuff. It might be too soon to be drawing those fibs because we haven't yet, right, we haven't yet printed a bearish reversal cycle. Okay, so we'll see once we start to get confident, right, sellers going to be taking over. We could be just saying like, hey, let's just do something like that, make it very, very easy. Okay, for instance, right, let's say we go all the way up to a 40K for Leroy, right? We could start to basically look for the let's do this. Okay, let's say we go all the way up to a 40K, right, like that. Okay, so we could start to look for our fibs to the downside, right? Okay, so we could be looking for a move all the way down, possibly like to a 50%, right, to 0.618, a possible consolidation right here. But once again, it is just a directional move, right? It doesn't mean like it will whip down all the way down to 22 from 40K and all that good stuff, right? Because the type of wave we could get right here could, you know, could take like another 5 to 6 months, right, before coming back down to these lows and all that good stuff, right? But it is just for speculation. I'm not saying it will completely play out like that because we don't even know. Okay, because the top could be around like a 32K, right? Let's say if the top is around like a 31K as of now, right, 31, 32 range, you know, our 50% pullback to down to a 0.618 pullback going to be all the way down to like a 21.8, right, to just about like a 20K area, right? Assuming like we do not basically break out above a 31, 32K, right? So just have to be open-minded until we get, you know, a clear directional reversal trend to the downside before we start to be looking for a move to the downside, right? So in the short to medium term, bearish weekly candle, yes, it is bearish, but we've seen it before, so we cannot basically just jump the gun and say like, hey, we're going to be dumping to the downside. Even though it is almost May, right, we still have to have to be very, very cautious. Okay, so if we take a look at it on the monthly basis, right, the monthly, if we close the monthly just like that, it is not going to be good for the for the bulls. Closing with a doji like that above the monthly 21 EMA, it is not going to be a positive sign, right? So however, if we close slightly above the monthly open, that'd be great, right? It's not going to be as bearish as if we close the candle with a close the candle below the monthly open, you know what I mean? Okay, basically closing the candle red. So it is going to be a dog fight going into May, because I'm thinking like bears want to close the candle just like that, but bulls will try to basically fight back and push the price above the candle open, just about like 28,475, right? 28,475.414, right? Okay, so we'll see how the monthly going to close. Especially, guys, we're going to get the Fed meeting on the 2nd, so volatility going to resume in the first half of I would say in the first half of May, or even like the first week of May. Between May 2nd to May 7th, we're going to get a high volatile market. Okay, the volatility could be boring for the rest of the month, right? So we'll see how it goes, right, and all that good stuff, right? One more thing on the 2D basis, I'm liking the 2D basis just because we retesting our 2D 21 EMA. As you can see right here, we did get a bounce back in February, the last week of February. After we retested our 2D 21, we got a nice bounce back in February 12. Retested the 2D 21, we got a nice bounce up to like 25k. So we'll see if bulls going to be showing up right here, because that's where we got our breakout exactly. Okay, just about like a 28k on the 9th of April, right? We pushed all the way up to a 31k from 28k. Okay, so that was a nice 11% move, but we lost everything and coming back down to retest our previous accumulation range. Now we're using it as a support. Okay, so bulls could be panicking because most bears going to be drawing something like that, right? And if we get a push back up, they're going to be like, oh, we got a nice head and shoulder top formation, and we're going to dump all the way down to like a 22 and all that good stuff. It is a possibility, but since like we haven't yet printed a head and shoulder pattern, we cannot basically jump the gun and saying like it is going to break it. As I just showed you on a weekly basis, right, these engulfing candles on during a bull trend, right, sometimes they can fail to basically get the reversal right away, just like what happened right here. On the 7-day cycle, it is slightly different. Let's take a look at it on the 7D. Yeah, it looks it looks the same on the 7D because we opened the candle on Sunday. That's why the 7-day cycle and the weekly cycle, they are pretty similar. Okay, all right guys, so I'm just gonna cut it short. That's all I wanted to cover for BTC. We'll see how it goes before May, because as I've been saying, the second half of 2023 could be a a boring phase or a bearish market, right, depending on the volatility, right? All right guys, thanks a lot for watching.